Hello everyone, welcome to my market breakdown. We've got 4 pairs on the watch here on our watch list. They are quite interesting and beautifully placed. So without any further ado, let's dive into it. The first pair we have is Euro USD. One of the reasons I choose pairs that are placed at value areas, right? Value areas is where the market is likely to reverse and we can get value for our money. So now if we look at Euro USD, look at this potential right here. It doesn't have to go all the way down. It doesn't have to do that. But we analyze and trade what we see, and should the market tells us otherwise, we will listen to the market and change our bias, right? But for now, what we have right now, we realize that we are at this value area, our area of interest, where previously the market created momentum and broke to the downside. So it is an area of significance. We cannot ignore it. Then we've got our previous high here, and that is our 4-hour time frame. Sorry, excuse me. That is our 4-hour time frame. If we want to take it from the daily, you can see this is clearly marked and we are here. The only concerning level is this one. However, if the market is going to take that route, it will tell us, it will break here and start doing this, because the market is communicating with us. It's unlikely that it will just go all the way. We will see signs from the lower time frames, but what we are seeing from the daily, already we are seeing rejection. So it tells that there's a great and huge amount of selling pressure right at these levels, right? So going to our 4-hour chart, we have to look how are we approaching this level. If you look the pattern, we are approaching it in a form of a pattern, and we are losing momentum. We impulsed, we came back, then we are correctively approaching this, forming an ascending channel, right? And this is one of the most beautiful structures we can have, where we have an ascending channel with 3 touches, at the area of value and area of interest. So everything so far looks good. Now, just to at the conference or to build our thesis further, let's just go to 1 hour. You wanna see? In the 4-hour, we have this candlestick formation. We've got 2 doji candles leaving long wicks to the upside, indicating a great selling pressure. And we've got a follow-up candle, full complete follow-up candle. So that just get to our confluence, and it just contribute to the process of building thesis, why we should be interested in the trade, right? So let's go to our 1 hour before we do that. In our 1 hour, we see we've got our ascending channel right here. Now, how can we look to capitalize on this? The beautiful thing is that we are trading below this level. Here we are below this level. We would like to see a consolidation or a corrective move. Not a big one, a small one, because normally the nature of the market is impulse, small correction, impulse, small correction, perhaps impulse, big correction. Just like that. The market normally moves like that, so it won't be abnormal for this to form right here. And we do this. So this is how I'll be looking to trade this trade, with a test stop loss of 7 pips. It is sufficient, right? 7 pips, it is sufficient. Look at all this potential that we have right here. to this low, at least even to this low, the beginning of this ascending channel, you've got 5.5% potential. The trade has a potential of 5.5%. So why not? You don't have to complicate these things to be profitable. You just need to look how simple the structure is. You just need to be consistent. You just need to know what you're looking for, and you have to be patient. Let the market come to you. Do not chase the market. You don't have to always be involved in the market. You don't have to be chasing trades. It's fine if you got a day or two without having any running trades, right? So our second pair that looks beautiful, it's a Great British Pound Audi. It's Pound Aussie. Now, if you go to the daily time frame, you will see that the momentum is still on the outside. Eventually, here we're looking for the sell to the downside, looking at impulse, correction, impulse, right? I think somewhere here I took a loss last week here. However, it is what it is the cost of business. So we've got clear momentum to the upside here. Where we are, you cannot question it, and we broke out of this chaotic condition where now we can have clear sight of the price. Now, if you go to the 4 hour, you can see what we are talking about. 1 hour, it's going to be clearer. So we went out of this corrective structure. Positionally, you can see potentially we are coming to test this level and this level. There's nothing much in between. There's this move that we can capitalize on, right? Let's go to the 1 hour and see how we can capitalize on, okay? If you look at the 15 minutes, we are forming some form of structure here. We broke out of this big corrective structure. We came and retest and broke out, right? Now, when we did that, we left a footprint right here. And if you can see what the price is doing, the price action is coming back to retest the footprint. And here we are. We would like to see something like this, a move back and up again. Let me draft it, something like this. Sorry, let me do this. Something like this. Yeah, that would be beautiful. If we can get something like that, then we will have our risk entry around this level. 10 pip stop or even 12 is fine. Then all the way to the upside, right? However, if the price then breaks to the downside, then the whole move is invalidated. The whole move is invalidated. Can we take sales? I'll only be interested in sales beyond this level. That's the only place I'll be interested in sales. Anything above that, it's a no man's land. So we will remain neutral here. We won't be taking any trades. But from this level, we'll be looking to sell. Comfortably so. Right? So straightforward. No complications. Simple, easy trade. Wait, be patient, and release the trigger. That's all you have to do. Now let's go to the third one. The third one, we have got EuroCAD, right? Now positionally, EuroCAD is placed very beautifully. It is beautifully placed. We can see we are in the value areas. Here we are, and we are looking to capitalize here. However, if the market does otherwise, we'll be going here, then we'll be looking for sales from there, right? But for now, what is it that we are seeing? We are focusing on this price action at the moment. Of course, it can go for a third touch. It is fine. We will see and give this expanding formation. We will see what the market says, but what is the market saying right now? Go into the 1 hour. Nothing much, right? But consolation is the fact that we are approaching the market correctively. That the nature of the price speaks volumes. Because if we are approaching this levels like this, it just tells you that I'm going to do this and continue. But when we are approaching it like this, it tells you that we have lost momentum and we are squeezing through, preparing to break to the downside, right? So how can we play this? We don't have to complicate it. What we just have to wait for is for the price to break above this level, break back in, give us some form of insurance entry in a form of corrective structure. Then this is where we'll be able to capitalize. Because if we don't wait for this, we risk chances of the market coming back, going back again, and just doing this and going to the upside. So we are avoiding that. We want the market to confirm to us that I'm ready to commit to the downside. So this one, be patient, let it develop, and you'll be rewarded greatly. 19 pips. Here we are. 10% to this low. You see? And look at all this potential move if we get all of it, right? There's so much potential. So let's be patient. Let's be patient. The market will reward us. The last one, we've got Aussie Chief, right? Aussie Chief also is approaching interesting critical areas. Area of value, and our area of interest. Guys, if you have noticed, I look for similar type of structures. I look for similar type of value areas because of it goes with experience, right? The more you trade, the more you have certain patterns that you feel comfortable with or you proved to be working more effectively. They are printing in your mind. They are priming, that is the word, right? You're going to see them with your eyes closed. When I browse through the pairs, I see this very quickly. I don't have to look at it 10 minutes or 15 minutes. Easily, I see them, right? So, as a chief, what would be our play? If we look this structure here, we are losing momentum and we are ascending to the upside, right? So we've got our 1, our 2. We are looking for our third touch here, and we can be interested in selling from there. If you look at it, it's the same structure as the Euro USD here. We are not even going far. Here, ladies and gentlemen, area of value, area of interest, ascending 1, 2, 3, and here we are going, right? Look at this. Area of interest, area of value, ascending 1, 2. We are waiting for the further ascending. Then we can start looking for trades here. If we don't get entries, we start looking for entries here. It will even give us more confidence and more confidence if we break out of this ascending and start correcting from here, right? However, we can even capitalize from here. So you see, it's not that complicated. Second touch, third touch, the price to go to the upside, come to the downside. That's how we're going to play it. So let's be patient. Let's let the market develop. Let's let the price tell us what it wants to do. There's no hurry, there's no rush. You will preserve a lot of capital by being patient and not be eager to always be in the trades. You don't have to have FOMO and you don't have to be in a state of euphoria. Be neutral, be in the center, and you'll be profitable. So, guys and girls, that is the video for today. We will see one another in the next video. Don't forget to like, subscribe, and click the notification button to be updated as soon as we drop a insane market analysis. God bless you. Keep well. Bye.